So now that we have the context, I think all of the companies here have been trying out kind of a variety of things. The first question that's on my mind is, can you folks help us understand what is that ceiling? Why does there feel like that there is some kind of a market force which pushes almost all of our companies to kind of even think of a adjacent category? Would love to start with you, Khilan, given that the Razorpay product suite doesn't fit on one brochure anymore. So if you can help us understand what is forcing Razorpay to kind of think beyond payments early on, and I think it started with a lot of products very early on, and even now with the launch of these products, what's making this happen?
See, at the heart of it, I think it's the innate customer obsession to keep diving deep and understanding what other problems the customers have, which are pretty similar to what we do, near adjacencies, and most of our products have been born from customer discovery, including some very not so clear ones. We thought we have a right to win, or should we enter in the space, right? But a lot of our customers have asked to solve for needs around this, right? And early on, we realized that if we solve multiple problems for customers, it builds longer relationship, better LTV, lesser churn, right? So a lot of those things become a lot more real if we go deeper with our customers. So I think that definitely was one of the motivation to build deeper relationships with customers and solve their problems. Having said that, you got to be focused. So we said no to like quite a lot of interesting opportunities that come along the way. So it's a hard one. Which one to finally kind of dabble in, and where do you kind of continue to keep saying no?
But is there something that you felt that, okay, this is, if we don't do this, Razorpay might cap out in terms of a revenue opportunity, or it might cap out in something else also? Is it just like, I know the customer story sounds interesting. It's always the story that PMs want to kind of talk about. But it's happening too frequently. So is there something else also that's probably making it?
Not exactly, right. I think there are two ways to look at it, right. I think one, of course, the TAM in a lot of categories in India is not as deep as Western markets, where in one category you could build a 100 billion company. So in India, to build that large and organization, very few markets have that deeper TAM. Fortunately, the core market we operate in has a very deep TAM, and the TAM has surprised us every year, every 2 years, how deep it is, right. But we look at a TAM as money movement, and in that, just cash continues to be our competition, right? So I don't think we've at least had that question mark whether the TAM is large enough for us. Do we need to find adjacencies in TAM? A lot of time it's to capture the core of the TAM, you got to solve adjacent problems, right? So many of these are hence related and linked around that if you really want to go deeper and capture the TAM, you need to solve for peripheral problems to help capture deeper pie of the market.
Okay, that sounds good. I think so. Yeah. So what you're telling me is that just the depth of market probably is one of the bigger factors, right?
Depth of market for us, one of the few markets in India where we think it's huge that we don't need to worry and say that let's go to XYZ new things which are maybe very tangential to our core. So consistently, and by the way, a lot of companies like us, we question our vision every year, saying this is the vision we set for next 5 years. Every year we enter in room, is it big enough, broad enough? Do we need to expand? Like, I think at one point we expanded the vision. Let's take India off the vision, solve money movement, and then I think 2-3 years back is one of the few iterations we've done, take India off it, right? So at least see if we can now take the software we build, take the suite we build to global markets. But we do do blue ocean every year. But if we end up iterating, beyond once in 5-6 years, we've done a pretty bad job of the canvas in which we want to paint eventually.
Got it. And because is it a similar thing for Groww? I think the market was fairly deep in terms of investments, but expanding to payments, which is in one way going in a different direction. And if you can also kind of talk about that for Groww, what were the different options even available on the table, and how did you think about what is to be done?
Sure. So I think one simple answer to why any company diversifies money, not beat around the bush. It's a simple thing. However deep the market is, and you pick up any big player in the world, the most valuable ones also. If you can figure out more top line, bottom line drivers, why not? Obviously, you would want to do it. However big of a TAM you have, you want to kind of keep on making it bigger and bigger, right? Along with it, I think on the Groww story, obviously people see you what you have launched because a lot of times we don't do being private companies like our shareholder presentations over there. But from day one, our vision has been how can we simplify access to all financial services to Indians. Now, from that perspective, you can say like our GTM category was investment, and within that also like more focus on mutual funds. Like when we even did stocks, 4 years being into mutual fund, people are like, why are you becoming a broker, right? वो तो Zerodha करता है, why are you doing it, right? But now it is obvious for everyone कि yeah, you should be. It's a very natural extension around it. But for us, it's just like we are still living that vision that we had 8 years back, and we will kind of still continue to do that. Because we feel like for India to grow, for Indians to grow, the access to financial services has to happen more and more, right? And investment was the first one. Then we all know access to credit is still not that kind of great, and that's why credit was the next one which you kind of got into, and how can we provide access to credit to Indians. And payments, I would say, is a kind of a lubricating oil of the entire machinery, or it's like a hidden river, like a Saraswati kind of flowing between Ganga Yamuna, which kind of just ties everything, right? So in that sense, payment was very obvious, because end of the day, all of this money movement flow is happening, and we just kind of love to control the experience as much as possible. Some things we can't, like exchange, but at least payments we can by using the digital infrastructure which is kind of built. So on top of it, kind of became a very kind of a natural choice for us, right? On your second part of the question, like how we kind of evaluate and what were the other options around it. Number one is it should kind of tie up with our vision, right? It's a financial service, yes. And can we play a role in that? Yes. Second is it a big enough market, big enough TAM, a large user pool, still kind of growing at a large pace? Whatever we've done so far has kind of answered that. Third is can we make money in it, right? That is very important for us. There should be big profit pools around it. We generally don't like to touch something which doesn't have a profit. And fourth is like what right we have to win over there. Sometime that's I would say the most tricky one. A lot of times, especially like a payments kind of thing, which is a very crowded market around it. And that answer we kind of sometimes we have it clear on first day. Some we kind of figure out over time if at least the first three are kind of answer, right? So these are the few pieces, and obviously now within this there are so many other options. I would say still kind of pending, which will kind of will come over time. There are still financial services like insurance and all which are not playing in, but in due course of time you'll see that also. I think 10 years down the line, if somebody will kind of reflect back, they will not even remember that we just started as a mutual fund company and why are doing all of these, and it will look like very obvious in hindsight when all of them kind of come together and we're able to stitch the user experience around that.
I want to touch upon the consumer perspective to this also, that when you're launching, let's say, payments, which has so many other players also, right? That there's a captive audience that had initially come for investments. Are you seeing that same captive audience kind of translating to also using other products? Or does that make your app and your product more broadly applicable? So you're now seeing acquisition being, let's say, the focus in terms of expansion. Like, which way do you see it working?
See, it's going to be both. Obviously, it always will start with your captive audience, because that's an easy way for them to kind of come discover. They are the ones who will also kind of trust you more in kind of using any of your new offerings, switching from maybe their existing player in the market. But over time, obviously, don't want to restrict yourself just to that audience, and you will keep on expanding it, right? Like payment is still relatively new for us. Like credit is even older, right? Like for that, our initial audience was the captive one, but now we are kind of getting a lot of users who are just kind of coming to us only for that. I don't know how many of you know over here. Now we have a separate app, Groww Credit, right? Which people, because we see like a lot of users want to kind of come to us just for credit, right? They're not even maybe looking at investment or want to do two different apps over there. So that's the reason we now even have a separate app for it. So it starts with the captive, but over time you will do acquisition. And then if you see from the overall growth engine perspective, you have multiple lines of acquisition, and then multiple kind of a cross cutting starts happening over there. And then it's a product and growth nightmare to kind of manage that. But once you're going to figure it out, it's like awesome.
I think I want to extend this question from Dezerv's perspective. I think, Sripad, you were catching up outside, and you mentioned that for you, the expansion plan was a lot more about opening similar segments but in new geography, which is the other alternative option, right? You take the same product and you expand the TAM in either by geography, or you say that, okay, I'm going to take the captive base and I'm going to make new products for it, right? And I'm sure Dezerv had both options available. You could have probably gone from wealth to grow investments, direct investments, all of those things, but you chose geography. Uh, how did that happen?
So that primarily happened because of natural discovery from customers. As we were serving Indian audience, naturally, organically, what started to happen was enough non-resident individuals started approaching us to claim the same services. And what we realized over the period of time is that given we are building this entire wealth services as digital first for the first time, that suited them much better than the Indian audience. Given there is a time zone gap and there is an information gap because of geographical separation, they preferred our solutions better than anything available out there. So that's how we discovered on it and then started.
Got it. Understood. And I'm going to extend a similar question, but from a CRED's perspective, that I think your first product was broadly applicable, but said to be the 1% and, credit card kind of a thing. Eventually, it expanded into multiple directions. One element that I want to also get a sense from you is that in the last few months, we've seen RBI also kind of coming in terms of changes on card payments, card payment rails itself, and how can that happen, right? Was there ever a existential kind of a question also that, look, we are entering into the market with the wedge of card payments, but we need to expand because we don't know how the banks will react or the regulator will react? And did that lead to, let's say, either hastening of launch of new products or just affecting the strategy in terms of how you think about customer acquisition and expansion? How did that play out?
The core thesis behind CRED was to say that, hey, let's pick an audience. Let's be very focused about one segment of consumers. And the thought was, if you are that focused, can that lead to differentiated products or just differentiated framing of the same products, right? So it started there. For example, credit card bill payments existed before CRED. People were paying their credit card bills on either different apps or through a bank's website, right? It's not something that we invented. So it was pretty much clear that if we are focused on a specific audience, then we have to be horizontal over time. It's not really an afterthought, and all the decisions that we made, in fact, sometimes when I look back, I feel like we're still executing stuff that we had thought about 6 years back. And a bunch of things that we are going to do also looks like we had thought about them 6 years back. I think the sequencing has changed. To your point, I think 6 years back, how we thought we would sequence versus what ended up playing out, I think those things changed. And that's a function of market forces. Where are tailwinds? You don't want to be too early. You want to ride on top of the right tailwinds, right? I'll give you an example of UPI. When we launched UPI, that was also a little counterintuitive because we took a bet on credit cards, right? And we saw that playing off. Consumers were able to resonate with that identity that we were trying to create. But we realized that credit card consumers actually do the most number of UPI transactions also, right? So, and then we thought, okay, if this is the case, then why shouldn't we, right? And along the way, what we did was we ensured that we were onboarding users on our TPAP to pay the credit card bills. So then onboarding becomes seamless later, right? So these have not been afterthoughts, just the sequencing has changed. But it largely comes from a place that we've decided to be focused on an audience. So the right way to go out building it is just trying to build as horizontally as possible, but trying to connect every next product with the origin story, right? So that it's more extensible and extensible and extensible.
I think that it's a good segue into the next thing that I want to kind of also talk about. That I think across everyone's answer, there was some element of vision, some element of story that was probably baked in fairly early on, right? And then you, as he mentioned, right, there's reality that happens, market forces that come into picture. I want to get a sense, and maybe let's start with CRED's story itself, right? That what was that internal story that you had in mind? And when you were thinking about that, okay, we have a vision, sure. It can either be right, it can be wrong. You start testing it in different ways, right? So can you run us through the decision making around when you're taking these calls, when to launch, what to launch? And as you mentioned, right, you would change sequencing, we might do something else. Particularly given the audiences from a product perspective, if you can run us through how you take these decisions as a company, what have you learned over the last many years doing this? Maybe you can also touch upon something that didn't work, something that worked really well and gave you like a framework to think about this.
If I go back in time, lots of right decisions, but if I were to share learnings on where is the right time, let's say you start with a core product, right? That forms the core loop, and a core loop essentially, I would say it's your core product that has to drive retention first, and has to get distribution. Distribution, ideally, I mean organic growth, right? When this loop starts working and there's a very strong habit formed, is when I would say that it's the right time to focus on something adjacent. And even within this, I would say, if you're trying to focus on something adjacent to actually solve your retention problem, I think the problem is elsewhere. You're not really chasing expansion. You're actually trying to still get to PMF, right? So I think that nuance also is very important to understand, because I don't think a core habit can be formed by just bringing 5 things together, right? It has to be one use case that there's a lot of depth in, build it in a way that you've sort of out executed on solving that problem for consumers, and then you start moving into the other things. On how we think about what we end up picking next, I think there are 2 ways to do it. One could be from an outside-in perspective, what's really growing, right? Because one thing that we think about a lot is where are tailwinds, because yes, I think all of us sort of identify as lazy people. So we want to be in a place where it's easy. There is no glory in hard work for the sake of it. So we try to pick tailwinds and then say that, okay, there are tailwinds, yes, but does it make sense for us to do it? And if we were to do it, how can we frame this differently? And what's our right to win? Right? I think these questions get asked, and that's what sort of dictates how we sequence stuff, right? So if you look at what we've done, so credit card bill payments, and then we said, looks like people are trusting us with high value payments. And what we realized is trusting when in money matters, I think doing low value transactions, a lot of them, versus doing very few high value transactions leads to very different trust, right? And also if you look at, if I break down trust in money matters, the time for which you hold someone's money, again, impacts trust, right? So payments is a split second, right? But for example, let's take deposits. You're holding money for very long, so that the barrier for trust is much, much higher. But within payments, high value, low value, something that we had that intuition and we thought that was right. And then we said, let's actually start doing other high value bill payments, right? And then we moved on to another product on the merchant side, right? So we launched CRED Pay, which was a container product. Going in, the way we did that was you anyway you trust CRED to pay your credit card bills. So you have all your safeguards. What if they showed up at all merchants, right? So that's how we started. That's how we stitched every new launch to the origin story and an origin behavior. So it gets easier if you do it that way. One example where it didn't work, how many of you know of this product called Periscope that we launched? So Periscope was a lifestyle and culture magazine that we launched. We had to sunset it. Didn't work because I think somewhere we knew it was very audacious, very orthogonal. Do people think of us when you say lifestyle? Yes, but it didn't really have too much to do with the core product. It wasn't really connected. It was very, very far out. So I'm not saying it won't work in the future. It's just that the manifestation of Periscope, the product that we launched, it was just very disconnected from the rest of CRED. So that's one example of something that didn't work.
I want to extend this to the direction of how the consumer thinks about brands, and I think from a growth perspective, that why is it that there is even a tendency for a user to be like, okay, I'm already taking this from this company, let me take another thing, versus there being an opportunity in market for very laser sharp, focused companies solving for one problem and being attractive just because of that part, right? Because for all of your expansions to work, the consumer also has to have that affinity that I will take my same item from the same company across multiple product lines, right? So how has that shaped up? What have been your learnings on those pieces? What even makes consumer think this way? And is there something fundamental that makes conglomerates happen, or is it more a business first thought that is making conglomerates happen?
I think it's a combination of both, and first driven by the consumer piece, like you said in the beginning, right? Conglomerates, because India, and I think Kunal Shah says it a lot, right? We are a trust deficit country, right? So once you're going to start trusting anyone, you're going to just kind of want to kind of trust them more, right? And what Akshay was just kind of touching upon if I'm trusting somebody to kind of manage my money, kind of deal with my money, kind of thing, I would want to do more and more, right? Let's take a step back, right? Let's forget fintech. Let's go even 20, 30 years back, right? And financial services, in fact, you see more and more of that, right? HDFC, ICICI, SBI, right? If you have a relationship with the bank, you will have the banking relationship, credit card, broking, and I can keep on adding on to it, right? More and more of your, because once you trust that bank, you will kind of just kind of keep on doing more and more relationships, and just the intertwining of that, the experience of, in spite of the different regulators and everything put together, it just becomes much more seamless experience for you to kind of manage it, right? And over time, with the digitization, even the traditional banks have been able to give you a one-stop shop for that, right? Now, I think with that kind of a backdrop, with that consumer kind of expectation, and from business perspective, as I said, if it is additive, and like what Khilan was saying, LTV is kind of being getting added. Even if I have a very deep TAM, if I can add more to the LTV, why not, right? Customer also wants it. It kind of, it's a win-win proposition for both of us. I can make it much better, right? Now, obviously, in some cases it works, in some cases it doesn't, which depends on a bunch of things. And there have been instances that even we had where we launched things which customers were asking for, but it still kind of didn't work out, and we had to kind of sunset them, right? But I would say it's a combination of both, where customers are looking for that because they just can't trust you and they don't want to. Like, a lot of the users are still like, I am happy that you have now payments. I don't want any other apps. I'll just kind of use one app and mera kaam chal raha hai, right? Everything is kind of happening in one place, right? But yes, there are also kind of a set of users. No, I want to kind of go to a vertical guy. I want to just a specialist for my job. I think they're all kind of a users. The main piece is, do you have enough meaty size of users who would want to do most of their stuff with you? Then you have a good use case to kind of keep on expanding it more and more.
Is there a flip side to it also, that you know how trust is built over 1,000 touch points, but to lose trust is like one bad experience, right? So does your risk as a business increase a lot because of that?
Yes, it does. But actually, if you're talking about business risk, if the user is much more entrenched with me, my chances of losing that user is much lower than, right? If it is just one piece of product that they're kind of using, anybody can kind of come and disrupt me, or the user can get fed up and or like something else, they can move out. Even if I'm doing a great job, I didn't do any stuff which kind of breaks the trust, they just kind of get bored of me. But it's like a marriage, right? It's easy to divorce if you don't have kids. Once you have kids, the bonding is a little bit much more. You're kind of into that relationship for a little longer. It's like that, right? If you have two kids, it's even further higher. So it just kind of keeps on adding up on that.
So fintech and life kyan in one session today. I want to quickly go towards the B2B side, Khilan. Is it a similar story there that, you know, when companies buying a B2B product and it's a comparatively a more measured purchase process in comparison to a little bit of B2C? But then when you're expanding, you're also taking a choice of whether I'm going to expand my core product and invest over there and go deeper versus I'm going to expand into other categories, but the products are not going to be as deep. It's going to take time. So how does a business think about that? Okay, should I, let's say I'm taking my payments from Razorpay, should I also take that other product versus again going to a specialist? Maybe let's say on a cross-border product, right? Razorpay is also building somewhere on those pieces. There are a lot of companies that are coming in cross-border. How does a consumer, a business consumer over here think about this kind of a choice?
It's a fair one. I think there is brand affinity if we do a good job and deliver value, right? There is trust that gets built, and but customers are a lot more rational. So if we are solving second problem, we've got to again create value. And one of the things we've stayed true to is building a platform in a manner where, while we've got 8-9 different family of products, independently each of them may be, or some of them might be 10% inferior to the best product in the category, but because of the power of the platform, how they interconnect to the core product and the other peripherals, 1 plus 1 can become 3. Right? So I think that's been one of the powers. For example, a lot of our payment suite gets closely tied in with payout, where COD refunds is a problem. Now this one's a hard one if folks don't get payout solved pretty well, and there are many such interconnected ones that, you know, make, even if in this case payout suite is equally good now, but early on when someone else did a better job, even then it became pretty easy for us to scale because of these synergies and use cases which made 1 plus 1 3. and many more like that. So together we've always believed that it's not just cross-sell, upsell. I think it's a platform approach where multiple products in the long run will become acquisition hooks, but it's not really upselling, cross-selling second, third. But when you use second, third, you just see the power multiplying, and hence it is very hard for an independent product in that category to compete with you. And we've seen in B2C with Googles of the world, B2B with Microsofts of the world, Team, Slack. I think a lot of examples where you get very good interconnectedness with the rest of the ecosystem that you use, and I think that multiplies value. So for us also, it's been true as we've gone deeper. We take a lot of effort in figuring out how do these interconnect with the rest of the ecosystem. Our growth suite as well, how does it interconnect with payments and the lending and the payout suite? I think some of these have been pretty interesting. Similarly, cross-border you spoke about, right? So a lot of these customers have both domestic and cross-border needs, right? It's very hard for in some categories to just unlock and solve for one need. Over time, I think the choice is not about whether you want to continue to go deep in your core and expand. I think eventually it's about creating value for customer, and the core hooks. If you do a bad job, you leave void space for a garage startup to come and create better value, you will lose the core. I think at the end of the day in B2B, we learned that if you don't create value, customers going to realize someday and going to find someone else who does a better job at it.
Similar question on I asked on the consumer side as a quick follow-up, Khilan, that do businesses worry about all of their core financial things being with one player and dependency on one player, and how does that kind of pan out with your expansion products?
I think yes and no, right? I think businesses do want interoperability and flexibility, especially enterprises, right? So it's not about one platform, but underneath the platform, how do you expose interoperability and flexibility? So every time we solve something for large enterprises, we've got to think of ensuring that they're not locked in with us. They've got flexibility, interoperability. And as simple as when tokenization came in, we were the first ones to figure what is the right choice for the largest of the enterprise to not get locked in with us, because they need all the flexibility, interoperability to do what is right for them in the long run. So I think these are now by default features. If you do these well, they don't feel locked in. You got to keep creating value and keep giving them all the right flexibility, interoperability.
Got it. I think the last thing before we take some audience questions, I think from a wealth management standpoint, I would love to understand that there's this common saying, right, that in wealth management, let the money just sit, don't touch it. But if you launch more products, you're going to go back to that user and be like, okay, we've invested some things here, maybe you should diversify. So your launch of new, let's say, investment options is kind of making the consumer think about that money where you may not want them to think about it, or maybe you do. So how do you think about expansion from a wealth management standpoint in this context?
As you rightly said, enough times what happens is when you are launching new products, people will take out money from the existing solutions and move it. But more often than not, what happen, how we approach it is different users have different objectives, right? Each user has where do users invest their money from. They have existing investments already outside, and there is fresh cash coming to them. So these are the stock and flow parts of the investments, right? So whenever we are launching new products, we think of what is a better product to replace their existing investment solutions with. For example, if someone is purchasing sectoral funds, what is a better solution we can launch to help them manage their money better? So that's how we go about new product launches. So we look at what are the existing solutions users are love, and what is a 10x better solution, and continuously launch them so that it's much easier for the user to take a decision. It's not a drain on the head of the user to think too much about, oh, is this right for me, or should I compare it with other products, so on and so forth.
Got it. Understood. I'm going to quickly move to the audience side. If there are any questions, we can probably move the mic around.
Noted down my questions. It's a little long, so I'll just read that out. So while expanding into newer products is always exciting, and like Vikas mentioned, why to ignore an opportunity to sort of add more top line revenue? Totally makes sense. How do you ensure this newer bet doesn't act like a distraction for the company and your core business? Because resources and teams are always limited, and you want to ensure that with those limited resources, you're focusing on expanding your market share in your core business. What are the things that you typically look at while evaluating an opportunity to expand? Is it like you look at the size of opportunity, you look at the right to win, or anything else? Or it's just a gut call to and wait for the market forces to react?
Anyone wants to take it?
Yeah, I can take that. I think on the second part, as I said, it's a combination of multiple things, right? Does it align with a vision? Is it a big enough market? Does it have good enough profit pools, a right to win? There are a bunch of factors, and everybody have their own framework, and obviously a lot of gut feeling kind of goes into it, right? And in fact, I would say the initial piece starts with a gut feel that you have, the market trends that you're seeing, and then you kind of go deeper with the data to see does it make sense or not. On your first part of the question, I think it varies on the stage of the company. Like and if you pick up any big successful startups also in India, right? Like the biggest one being even Flipkart, right? It was just doing books for 4 years, only books, right? And now books is like hardly anything for Flipkart types, right? At Groww, we were just kind of doing only mutual funds for the first 4 years, right? So because at that time, like you rightly said, the resources are limited. You have to be super focused, go deep, and just kind of keep on solving for that problem and kind of get a right scalable PMF in that and kind of keep on building capabilities, right? And then at the right moment when you have the resources, you kind of go wider around it. And when at that point of time, then you have enough resources to make sure that the new piece that you're doing is not impacting the first or the core piece as per, right? So typically, like at Groww, whenever we do something new, we like have a dedicated team kind of working upon it, right? Which is and generally it will not impact my existing pieces already. We might kind of, yes, move some people, will make sure like the core team is kind of for the whatever the initial pieces are there, they're already kind of working around it, even at a leadership level. Like for the last couple of years, like that is one role that I have been playing over there, that keeping all the distractions to me and my other colleagues are looking at are kind of products which already have a PMF and just kind of focusing on scaling it, and I'm kind of dealing with all that piece, right? And full end-to-end team. So that's one way, and then it's the right time when you have the enough resources. Obviously, if you don't have enough resources, then maybe I would say if you're doing something else, it's more of a pivot, or then yeah, it's a distraction otherwise.
Cool. We'll take one more question. Is there anyone? I see a hand. Cool, we're out of time, but I want to do a quick poll in the panels. I think for a lot of product folks, you want to try and give structure, and there's a method is how we kind of project things. But a very quick poll: is expansion a lot more chaos with an attempt to structure, or is it a lot more of structure with some chaos which is manageable? What's been your reality? Just select one of the two options.
I think it's always starts with chaos, and I think because you tend to have these structures in your mind, but I think any new launches or any 0 to 1 launch, I think 100% is chaos. It's almost like building another startup, right? So in fact, I've also seen that 0 to 1 launches also need a lot of optimism, because sometimes you just have to believe that this is going to work, and that's the only way to build it, right? So I think at least what I've seen is that also sort of tends to influence who in your team should actually be working on some of these things, right? And the first time you're going through this phase, there will be chaos, because suddenly how do you compare your core to what you're doing? The fact is you can't compare them. It's not about trying to really objectively compare. You can't compare them, you shouldn't. What tends to happen is someone who's trying to move a metric from the 98th percentile to the 99th percentile, you end up realizing that you have to still celebrate it, right? And the difficulty to solve that problem is actually very different than launching something, probably getting a million users. I think every org tends to go through that phase, and starts with chaos, of course, but I think everyone finds their method to doing it over and over again.
Okay, I think we'll end at this. We're out of time, but the panel's still around. This is a very deep and complex topic, so feel free to kind of catch them up and ask more details and more questions. But that's for now. Thank you, folks.